Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at AST SpaceMobile.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And a quick note before we get into today's stock. If you trade stocks, crypto, forex, gold, or indices, and want clear buy and sell signals, you can check out VIP indicators through my link below. The campaign is grow $100 to $10K with VIP indicators. VIP Indicators offers TradingView indicators, market alerts, trading education, and chart reading support with up to a 93% win rate.
Right.
The tools are designed to help traders spot possible setups faster and, trade with more confidence. But please remember, trading is risky. No indicator can guarantee profits, and growing $100 into $10 is absolutely not guaranteed. Use these tools for education and analysis only, manage your risk carefully, do your own research, and never trade money you cannot afford to lose. This is an affiliate link, so I may earn a commission if you use it at no extra cost to you.
Awesome. So let's jump right in with the hook here. Imagine just for a second that you are entirely off the grid.
Okay.
Like you're hiking deep in the backcountry of a national park, or maybe you're sailing miles out in the open ocean.
No Wi-Fi, basically.
Exactly. No Wi-Fi, no traditional cell service. Usually when you think about connecting to the internet on your phone, you picture a cell tower. You know, the ones, those massive kind of ugly steel structures.
Sometimes disguised as fake pine trees.
Yeah, disguised as pine trees, planted right there on the edge of town. They are stationary, they're grounded in concrete, and they only cover a very specific radius, right?
Right, based on the curvature of the Earth.
Exactly. But today, we're completely flipping that image upside down. Imagine looking up at the night sky and realizing that the cell tower connecting the device in your hand is actually hurtling through low Earth orbit at 17,000 miles an hour.
It's wild. All right, let's move into the wealth building context here, because that visual completely breaks the traditional mental model of telecommunications that we've relied on for, over a century?
Definitely. It's a total paradigm shift.
Yeah. We are no longer just talking about bouncing signals off a dedicated satellite dish mounted on your roof. We are talking about an invisible orbital cell tower connecting directly to the completely standard piece of glass and metal you already have in your pocket.
And that is the exact reality AST SpaceMobile is building right now. They've transformed, like, overnight from a quiet research and development project into a $41 billion Goliath.
A literal Goliath taking aim right at Elon Musk's Starlink.
Right. It's a classic David versus Goliath narrative, except David has a $41 billion market cap. So our mission today is to figure out exactly how they plan to pull this off.
Yeah, separating the hype from reality is critical here, because while their technology and their strategic partnerships are, frankly, revolutionary, they are sitting at a highly precarious inflection point.
They're burning through cash.
Billions of dollars in capital, yeah, to physically build this network in space. They have to execute flawlessly over the next several months.
So let's get into the B2B space mode. Because for years, the narrative around satellite internet was strict. You buy a specialized dish, put it on your roof, point it at the sky.
Like the classic Starlink model.
Exactly. Direct to consumer. But AST SpaceMobile is doing direct-to-device connectivity, or DTD, and they recently hit this huge milestone. They transferred data at 98.9 megabits per second from a satellite directly to an unmodified smartphone.
Which is incredible.
Right. But how is that physically possible? I mean, my phone battery drains just trying to find a signal in my basement.
Yeah, it sounds impossible, but that is the magic of their architecture.
Sure.
Instead of putting a heavy satellite dish on your roof, AST is essentially putting that massive dish into orbit.
Okay, so the satellite itself is huge.
Massive. Their satellites, which they call bluebirds, unfold into these giant phased array antennas, hundreds of square feet in size. Think of it like unfolding a high-tech tennis court in space. Because the satellite in orbit is so incredibly large and powerful, it does all the heavy lifting. It essentially shouts loud enough and listens sensitively enough that your phone doesn't have to work any harder than it would connecting to a local tower.
So the burden is entirely on the satellite.
Exactly. And that is why the word unmodified is so crucial. You don't need a bulky satellite phone with a thick rubber antenna from the 90s.
Right. No special hardware.
It works seamlessly with the smartphone you already own. And reaching that 98.9 megabits per second threshold, that's a validated tech mode. It proves they can deliver broadband speeds, not just a delayed SOS text message.
And they have a regulatory moat now too, right?
Oh, absolutely. They recently secured approval from the FCC to provide commercial D2D services in the U.S.
Which is famously hard to get.
Extremely hard because radio frequencies are so congested. But what really stands out is their business model. They are completely B2B. They've integrated directly with nearly 60 global mobile network operators.
We're talking AT&T, Verizon, T-Mobile.
Yeah, the heavyweights. Which gives them immediate frictionless access to over 3 billion existing subscribers worldwide.
3 billion. So their customer acquisition cost is basically zero.
Literally zero. The telecom operators already own the relationship with the customer.
It's like, okay, if Starlink is convincing you to buy a separate cable subscription, AST is like quietly upgrading the invisible plumbing of the internet you already pay for.
That's a great way to put it.
You might not even realize you're using space internet.
Mm.
But wait, if they're essentially partnering with these giant telecoms, doesn't that make AST a massive dependency?
Yes. And that dynamic is fueling intense market speculation right now. There's a rumor of a $1.2 billion joint telecom venture between AT&T, Verizon, and T-Mobile.
Oh, wow.
Officially, they say their independent agreements remain. But the market thinks AST SpaceMobile will be named the exclusive infrastructure provider for this mega consortium.
A tier 1 shot across the Starlink bow, basically.
Exactly. The historic competitors are banding together to use AST as their shield against SpaceX.
Okay, so they have the tech, they have the partnerships. Now let's look at the fundamentals. Because if the tech is so good, why are they bleeding so much money?
Yeah, look at Q1 2026. Revenue was only $14.7 million.
Which is tiny for a $40 billion company.
Tiny. And they had a massive GAAP net loss of $191 million for the quarter.
That's, what, roughly 66 cents per share?
Right. But you have to look at why. It was entirely driven by $164 million in capital expenditures and operating expenses.
CapEx and OpEx.
Exactly. CapEx is the hard money spent building the physical Bluebird satellites. OpEx is paying the aerospace engineers and the launch providers. Building a cell network in space is violently expensive.
And despite burning nearly $200 million in one quarter, management is reaffirming these massive hockey stick projections.
Oh, the guidance is wild.
They're guiding for $150 to $200 million in revenue by the end of 2026. Then they project a leap to $1 billion in 2027 and $2.1 billion by 2028.
And the market is completely buying it.
Totally. The stock has rocketed to around $105 a share. That pushes the valuation to nearly $41 billion. Let me play devil's advocate here.
Go for it.
They are trading at a forward price-to-sales ratio of roughly 87. They missed Q1 revenue consensus by 60%. How does a $41 billion valuation make any sense for a company pulling in less than $15 million in a quarter?
It sounds totally detached from reality until you understand how financial markets price futuristic infrastructure.
Okay, break that down.
We are looking at a classic pre-revenue inflection phase. The market is not pricing in today's $14 million. It's looking past that entirely. Investors are pricing in that 3 billion subscriber total addressable market.
Right. If they capture even a tiny fraction of that at a few bucks a month.
They become a cash printing machine.
Yeah.
But a $1 billion projection is just a hallucination unless you have the cash to actually survive long enough to build the satellites.
Which is the big risk.
Right.
If you run out of money mid-build, the whole thing collapses.
Exactly. And this is AST's trump card. They have a heavily fortified balance sheet. They exited Q1 with roughly $3.46 billion in cash and equivalents.
That is a massive war chest.
It is. Now, they did recently file a shelf registration for $166 million tied to their employee stock ownership plan.
Let me jump in. A shelf registration means they filed paperwork to legally issue new shares, right? Usually that dilutes existing investors and tanks the stock.
Normally, yes, dilution causes panic. But because they are sitting on that $3.5 billion mountain of cash, the market just shrugged it off.
Standard corporate housekeeping.
Exactly. That massive cash buffer eliminates near-term fears. The market believes that war chest is enough runway to physically launch the network and hit that $1 billion mark in 2027 without going bankrupt first.
Okay, that brings us to the catalyst timeline, because the cash pile explains survival, but it doesn't explain why the stock is surging right now.
For that, we have to look at the mechanics and sentiment.
All right, let's pivot to the chart. Technically, the stock is trading structurally above its moving averages. The 20-day is at 77, 50-day at 83, and 200-day at 75.
Which signals a massive structural uptrend to algorithmic trading bots. They just keep buying.
So what does market sentiment look like beyond the bots?
Well, the real rocket fuel is institutional capital flow. Space-themed ETFs have seen $1.3 billion in inflows over just the last month.
Over $1 billion in a month.
Yeah. And the market has introduced these highly aggressive 2x leveraged ETFs, like the ones from Defiance and TREX.
Oh, those just inject pure speculative liquidity into the stock.
Exactly. They amplify every upward swing. And here's the kicker: combine that immense ETF buying pressure with the fact that short interest on AST remains highly elevated at 18.1% of the public float.
Wait, nearly 1/5 of available shares are sold short?
Yes, investors are aggressively betting the stock will crash.
So it's a perfect setup for a short squeeze. The ETF money pushes the price up, and the short sellers are forced to buy the stock back to cover their bad bets.
It's a violent chain reaction. But the spark that really lit this current powder keg actually came from their biggest rival.
Oh, the SpaceX S1 filing.
Yes.
This detail is fascinating. SpaceX is gearing up for its IPO, scheduled for June 4th through the 12th of 2026, and in their official S1 paperwork, SpaceX explicitly names AST SpaceMobile as a leading competitor.
It's one thing for an analyst to hype you up. It is completely different when Elon Musk's company legally files paperwork warning investors about you.
But wait, if SpaceX is raising billions in an IPO, shouldn't that crush AST's stock? Like, won't investors just pour all their money into Musk's shiny new IPO instead?
You'd logically think so, but modern market mechanics work differently. It's called sector validation and thematic capital rotation.
How does that work?
As the hype around the SpaceX IPO builds, a tsunami of capital is directed toward the broader space economy. Passive index funds and retail traders suddenly mandate exposure to space.
But they can't all get allocations in the tightly controlled SpaceX IPO.
Right. So what do? They blindly buy the broader space-related equity baskets. Since AST SpaceMobile is a top holding in almost all of these space ETFs, the incoming tide from SpaceX is actively lifting AST's boat.
That's ironic. The excitement around their biggest competitor is driving their stock to all-time highs.
Exactly.
Now let's talk about the risks, because as unstoppable as this momentum sounds, we have to talk about gravity. What is the bear case here? What brings a $41 billion valuation crashing down?
The primary risk is the brutal reality of space deployment. Launching sophisticated hardware into the vacuum of space is just incredibly hard.
Right. In April 2026, the Bluebird 7 satellite failed to reach its intended trajectory.
And it had to be deorbited.
Which is a very polite way of saying hundreds of millions of dollars burned up in the atmosphere as a fiery streak of debris.
Yeah, it's a devastating loss of capital and time. And it really highlights the execution risk ahead of them. Everyone is intensely focused on their upcoming mid-June 2026 launch.
Right. The Bluebird Block 2 satellites, numbers 8, 9, and 10.
And the ultimate irony: they are launching them aboard a SpaceX Falcon 9 rocket.
Wait, they are paying their primary competitor to launch the network designed to defeat them.
Welcome to the orbital economy. SpaceX has a near monopoly on reliable launch capabilities right now, but the pressure on this mid-June launch is immense. AST desperately needs to reach a constellation target of 45 operational satellites by the end of the year to unlock continuous global coverage.
And to actually hit those 2027 revenue projections.
Exactly.
It's like building a startup, but every time you want to plug in a new server, you have to strap it to a bomb and shoot it into the sky. Does one failed rocket in June invalidate this entire thesis?
Well, if the June launch fails, or if those carrier agreements don't convert to actual revenue quickly, it would be catastrophic for the stock price in the short term. The stock is priced for absolute perfection.
Right. Any delay means they keep burning $191 million a quarter.
And eventually, that $3.46 billion cash cushion vanishes, bringing severe dilution right back on the table.
So with everything on the table, what's the final verdict?
You have to view it through the lens of an asymmetric bet. The underlying thesis remains an 8 out of 10 bullish score for the long term, looking out over the next 12 to 24 months.
Because of the catch pile.
Exactly. That $3.46 billion is the ultimate shock absorber. It gives them the financial right to fail a few times while dialing in their deployment. The bears are definitely circling. We see that in the 18% short interest. But AST has the runway to outlast them, provided they get that 45 satellite constellation operational.
So to synthesize this, AST is a high-variance asymmetric bet. They're burning hundreds of millions to build a revolutionary space network armed with a massive cash pile, an army of telecom partners, and the explicit respect of SpaceX. Whether you're an investor or just a tech enthusiast tired of dead zones, you're watching the foundation of the next generation of global infrastructure. Definitely watch that mid-June Block 2 launch and the Q2 earnings in August.
Absolutely. And it leaves us with a provocative thought. When space-based connectivity eliminates dead zones globally, how will that shift the balance of power? If the sky is the new cell tower, who really controls the internet?
That is a staggering thought. And if you want extra help reading trading charts, you can check out VIP indicators through the link below. The campaign is Grow $100 to $10 KK with VIP indicators, and their tools include TradingView indicators, market alerts, and trading education with up to a 93% win rate. But remember, trading always carries risk, and no profits are guaranteed. Growing $100 into $10 is not guaranteed either. Use the tools for education and analysis, manage your risk carefully, and always do your own research before making any trade. This is an affiliate link, and I may earn a commission at no extra cost to you.
And if this episode helped you, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua episode.